Hello, everyone. So today we're going to be talking about Apple stock, ticker AAPL. And we're going to be looking at its valuation currently, some of its financials, news, what's going on with it, and telling you if it is a buy or a sell, in my opinion, right now. So let's just look at how it's been performing lately. One day up 2% was an up day. 5 days, 3.4%. 1 month, 5.7. So down over 3 months, up 13.61% over 6 months, only up 8.1% over a year. If we look at the 5 year, up 97.63%, which if we benchmark this to the S&P, we can see that it is outperforming on the 5 year, but we are underperforming by 6% on the 1 year. So this kind of gets into an overall theme that the growth on Apple is slowing down a little bit. And we can see this if we go to the 5 year and we chart the 50-day and 200-day moving average. And you can see that although recently there was a gold cross, so just saying that the price momentum is speeding up lately, we can see that this might actually be reverting soon. And it's on the track to be reverting kind of within a month at this rate. So very interesting to see, but we've been seeing a lot of these death crosses showing up lately. The red points on it just showing that the price has been slowing down on it quite a bit. So yeah, if we just kind of get into an overview about the company, just what it does, I'm sure everyone watching knows, but I mean, they have the iPhones, the smartphones, the Macs, AirPods, Apple Vision Pro is a recent endeavor of theirs. Then you got their subscription service, Apple TV, Apple Watch, which are great. See HomePods in here. They should also be talking about AirPods. Yeah, AirPods, because those are incredibly successful. So a lot of products that people use in their everyday life. And something interesting about Apple is everything is super integrated with each other. Androids don't want to work with Apple. Well, basically Apple doesn't want to work with Androids more or less. But point being, it doesn't synchronize unless you're all in the Apple ecosystem, which just pushes a lot of motivation to buy more Apple products if you already have them. So that's kind of their moat. If you have Apple devices and you're in the Apple ecosystem, it works very well for you. If you're not, it's tough to get into it, and you have to basically switch over everything you're using over to the Apple ecosystem. So let's look at some of the metrics here. We have a $3.9 trillion market cap, one of the biggest companies in the world. Pretty high PE ratio, but it's a tech company, so we got 33 PE. Earnings per share, beta, have some high volatility associated. We got a bit of a dividend yield, nothing crazy to rave home about. Very large amount of employees, 150K. They employ a lot of people. Now, so we got some price range and volume trading. If we look at some of the analyst estimates here, they can range all the way from $205 to $350, which what we're seeing is that it's currently trading at $264. So kind of whatever end you're looking at it there, you can make a case for selling or buying based on these alone. But if you look at the consensus rating on 41, you got a buy rating. So yeah, we can see it here. And then, yeah, I mean, although the insider sentiment may say bearish, in reality, people typically sell stocks when they come in, especially if they're being granted stocks. So it's not a surprise. I mean, a lot of stock grants here in sales. I'm not really expecting any Apple insiders to be buying Apple stock, especially with its slow momentum and price. So let's look at some of the financials here. We can see the PE ratio, forward PE, which is actually lowering, so maybe showing the valuation coming down a little bit. Price to book, price to sales, PE ratio history, we can see that it's actually been increasing over the years. And then look at some of the earnings growth. We can see that 2021 really showed out. 2022 was only 5%, very modest. 23 and 24, they actually had earnings decreased. And then 25, it showed out kind of at that 19.5% in earnings growth. If we look at revenue, it's going to kind of follow the similar story. 33% in 2021, 7.8% 2022. 23 is a down year. 24 is pretty close to trading middle, 2%. And then 2025 was only a 6.4%. So it is interesting because we can see, although the earnings might be growing, that the revenue is being constricted at the same time. So here's our revenue overall chart. It's been steadily increasing up and to the right, but we can see ever since 2021 there's kind of been this plateau point, but it doesn't say they can't push beyond that because we've seen similar plateaus with their revenue in the past. And earnings per share is going to kind of show a similar story, but you can see that after 2011 their earnings per share dropped pretty significantly. So more or less it says that the average investor actually isn't getting that much out of it, and that could just be from it being pushed up in valuation. I know Apple does a lot of stock buyback, so that doesn't hurt the EPS necessarily. In regards to their profitability, we have some great margins here. Apple is very good with profitability. Gross margin of 47%, operating margin of 35%, and we come out to a net of 27. 27% net margin on a sale is amazing, especially how much they'd be charged on some of these devices. So not bad at all. Excellent return on equity, and then you got return on assets here. That is also great. So you can see a net margin has kind of stayed pretty consistent throughout time. Return on equity has been increasing over time, which we love to see. Cash flow, you see their free cash flow at $106 billion, absolutely massive. Operating cash flow is at 135. So that brings a free cash flow margin of 24.41%, which again is incredible. Incredible. You see their free cash flow history up and to the right, kind of following that revenue chart, but you can see that their free cash flow has actually been kind of steadying out since. I mean, it's kind of like that 2021 point. They must have just had a massive year in 2021 because it's been kind of slowing down and staying moderate since then. And we can see that although, free cash flow has been going up and down a little bit since then, it's kind of been stagnant. So that's something that is concerning. It's kind of showing maybe they're growing and leaving their high growth phase that they've experienced in the past. I mean, you can see the free cash flow in 2007 was 5.4 billion, and all the way from 2007 to today, I mean, you're almost at 20 times the free cash flow, which is crazy. Then we have the free cash flow margin history too. So this kind of shows what I was getting at earlier in terms of earnings, but their free cash flow margin has been decreasing over time. I mean, again, 2011, we can see it peaked here, and they were doing incredible with a 34% free cash flow margin history. They're basically printing money at that point. But ever since 20, let's see, I mean, it's been down since, even if you look at 2020. 2020 was at 26%, and now today we're at 23.73%. So it's come down over time, which isn't something we like to see. And there's a couple things that could explain this. I mean, you have tariffs that came up, which would be why it's probably trading up today because Supreme Court just ruled tariffs were illegal in the way they were implemented, which tariffs were heavily impacting Apple, especially with the precious metals they might need or like lithium batteries and all that. But also at the same time, you have to look at Apple's investments into AI, data centers, investing in all that, capital expenditures. Capital expenditures have been high for all companies, including tech companies mainly, and Apple does fall in that category. So yeah, of course, capital expenditures is going to be pushing this margin down. So you can see that 2025 specifically is about like 4% lower than last year. And I think a reason for that could definitely just be these investments into their future of their business. And although that's good, we do have to take into consideration that that is lowering their margin at the end of the day of what free cash flow they're bringing home. And then, yeah, of course, you got just your metrics over here if you want to read them. Nothing too crazy, honestly. We kind of went over it, a lot of it with these charts here. We can look at their dividend history. So let's just look at like all-time dividends. We can see that they've steadily been increasing their dividend, which is always great. I mean, although this will be already more or less considered when doing a discounted cash flow calculation, I would say having more dividends kind of helps the average investor feel that return on equity on their investment a lot easier because the numbers are just kind of laid out flat, before you. It seems almost like an extra paycheck. So if you like dividend payments and you're looking for a company that increases the dividend over time, it seems like Apple's kind of on that pace and that they more or less pay like a pretty steady one for the year and then bump it at the next year. That's kind of what their whole payment schedule looks like here. You got plateaus and jumps, plateaus and jumps. So great to see that they've been doing that. We can look into some news articles, kind of just seeing what the public's saying. I will say, in my mind, what I'm thinking of Apple personally right now is that they've come a long way. They've integrated in society very deeply, obviously, but they are reaching stagnation. They aren't as innovative as they are before. The next iPhone every single year seems almost the same as the last one, maybe slightly better, a little better camera, yeah, a little more memory, maybe something like that. Runs a little faster, a little more battery, but it's always a little more. In the past, I mean, going from like an iPhone 9 to iPhone X, or like a 5 to 6, it was a big jump, or 6 to 7. Like those were all major big jumps in the phone. And you have all this innovations, all these new apps and features. And now the thing they're pushing is kind of AI, but they haven't really made the big AI jump and actually executed it properly. They haven't overhauled Siri. I bought the 16 Pro, and at that time they said overhaul Siri would be coming. It's over a year, and overhaul Siri hasn't came about. And yeah, sure, they got some unique AI features like notifications, prioritize notifications. That's pretty cool or whatever. But point being, they're not delivering on their promise of it. So let's look into some people what they're saying. Apple stands out amid memory crush. Equities rise as Trump sets additional tariffs after Supreme Court ruling. And this kind of gets into what I was saying, that tariffs are going away, so it's going to actually help them in the future. Because if they were dealing with heavy tariffs, especially if they were like importing from a country like China, for example, which was seeing high tariffs, that's really going to affect their margin. Yeah, let's see. Supreme Court. Yeah, it seems like a lot of people are really interested in Supreme Court and how tariffs is affecting that. OpenAI developing AI devices, including smart speaker. So Apple is partnered with OpenAI and some of their AI connections. Basically, if Siri can't answer it, it goes out to OpenAI and outsources your answer. So if OpenAI is doing good, it's going to help Apple more or less. Yeah, and then I mean AI spending boom. This is a good point. I was going to mention too. It seems like we're in a lot of sink or swim in the AI industry, and maybe some of the value isn't there. I mean, something like Claude is obviously showing up with value, but a company like OpenAI, they're not necessarily standing out amongst competitors. And a lot of companies that are putting this AI investment down, like Microsoft, they're not seeing the return. Actually, AI, especially with the coding, is hurting them incredibly. So the fact that Apple was a little late to the game and seemingly, I'd say, almost dragging their feet on AI, it might not be the worst thing, honestly, because it lowered their capital expenditures than what it could have been. And then maybe taking a step back while people were kind of messing with it, doing this or that, could actually benefit them, quite frankly. So that's typically what Apple does. They typically take a step and then mimic the competition and do it better. So maybe they're still coming around to it. Bearish. Um, let's see if any of this actually applies here. Margin pressure and lack of innovation. I mean, that's kind of what I was talking about. You got seeking alpha, potential rating downgrade. So yeah, the fact they're kind of plateauing with what they're delivering in terms of product, there's not innovation, and people expect innovation on Apple. They think it's kind of what the company's known for. I mean, you have amazing products like the AirPods, the Apple Watch. Those are incredibly innovative and within the last decade. But then you have something like their augmented reality glasses that they released, and those things totally flop. They barely sell. Many people don't use them. They're very heavy on your head, I've heard, and stuff like that kind of goes against them. So I'd say that's kind of where the bearish case comes with Apple. People know they're a strong company. They have great financials. They're really showing out in a lot of aspects like that. It's no secret, but also it's no secret that at the end of the day, they're not performing to what they used to be. I mean, we can see that even in the stock chart here. 5 months, well, 5 years, you were just incredibly flying up. But if you're looking at the price today, you look at the price to end 2024, it's about the same. So that's quite interesting. It's not a good look. It's kind of like when you look at Tesla's chart, you do the 5 year. Soon enough, you're going to be trading even. So if we do the 1 year on the Apple, soon enough you'll be trading at an even valuation. And we've seen, I mean, they've benefited off like the whole AI boom. But as we're going to see that kind of pressure on AI companies to show out and actually represent their capital expenditures as new revenue streams, we're going to see that pressure on Apple. So it's something definitely to keep an eye on. And now to end this, we can look at the discounted cash flow calculation, and we're going to look at some potential situations here. So the revenue that pulled in here, this is the 1 year trailing average. So we got 12 months of the revenue rather than just the most recent annual. And that we know, we can see their free cash flow margin down here. They were trading at about 23.73. So we're going to set that for the average case, 23.73. Okay. We'll start up here at the bear case. Let's say they have a 20% free cash flow margin. They lose a couple more percentages. Say that capital expenditures remain. Okay. If capital expenditures are remaining high, it's going to keep pushing us down. And then we're going to have something like no innovation, right? Both those things matter. We've got shares outstanding here. And now let's look at their revenue growth recently. We can see in the last year only a 6% revenue growth, 2%, minus 2%, 7.7%, and at 33% in 21. So obviously 21 was an outlier here. Maybe they just had some crazy innovation that came out at that time. but we can see that it's almost been trading flat since then. So in the bear case, let's say that we're kind of staying at that, slow stage one growth. And it says for 5 years in stage two growth, we're just going to go out at 3%, which is going to be the same as the nominal growth, well, the terminal growth. And then let's look here and say that their stage one growth is going to be, I would say they can push up to what it's been in the past. So 7%, let's just say that. And then maybe you could say like 4% for stage two growth. And then we can have our terminal growth at 3%, of course. And then we're gonna, for the bear case, have a 10% discounted cash flow rate. And then for the average case, a 9%. And then for the bull case, 8%. So 10% means a kind of market's been, going up faster. So you're gonna need to see more alpha out of Apple to make sense of it. This kind of cash flow rate of 9% is about average. And then bull case, say the market is slow and Apple's doing good at the same time. So we're going to discount it a little less. And then we're going to say this is operating as today, increase free cash flow margin. Okay. And then for this one, I think, and let's look, we're saying 28%. Historically, they've traded all the way up to 35%. I would say the bear case would be that they push back up into the 30%. I mean, we can see that even last year they're at 27.8%. So realistically, they could definitely push up into 30% free cash flow margin, no doubt. Now, I would not say they're going to have a 21% revenue growth, but let's say they do kind of push up to above average revenue growth. Let's say we're pushing 12%, and then maybe like 8% stage two, and then we're having a 3% terminal growth rate. And we can calculate this here. And we're going to say that we got a 20% for the bear case, 20% for the bull case, and 60% for the average. Typically how I like to weigh things, it just seems right. We can see that the bear case would say the implied price is only $95, which is a lot less. And it's a bear case for a reason. We can say that the average case, 152 implied price, so maybe we're being a little too harsh on it. But we can see that the bull case really does push up a high implied price. So you could make an argument for it. And this more or less gets back kind of what the analysts were saying, that there's a wide range of how you could evaluate it. I don't know, I'd almost be, say let's keep kind of the same free cash flow margin for the bear case, because this is kind of a high capital expenditure environment. Recalculate it, I mean, we're still overvalued, but okay. So let's go down. If we weigh those into consideration, we're going to see, let's give a little description of the bull case. Increased free cash flow margin, and then higher revenue growth. Okay. So yeah, now if we see here, we can kind of see where a lot of the values are coming from in the situations that we're operating. So the bear case, 20% probability, that gives an implied price of $109 for that situation. If you weight it, that's a $21.86. Then look at the average case, we're going to say 60% probability, and that we're going to have an implied price in that situation of $152. It's giving us 91.34 on the weighted value. And that the bull case, 20% probability, implied price of $376.41 with a weighted value of $75.28. So if we're weighting out these situations with these probabilities, we're going to get a weighted fair value of $188.49. And we're currently trading at $264.58, which gives a 28.76% overvalued. So that's not necessarily good to see if you're an Apple investor. And it becomes a little tough with some of these large tech companies. So let's put a big disclaimer on this, that Apple tomorrow can make something incredibly innovative. And that's what the bulls are going to argue, that they've been known to innovate and that they will innovate and they're going to increase their cash flow substantially. I mean, they've messed around with their credit card system. They're redoing that overall. Hopefully they can, become a large bank and bring in banking revenue and finance some more of their capital expenditure and stuff like that. So we can mess with these numbers and kind of see what we'll get out of it. So let's say the average case, typically maybe they revert to something like 9% and a higher stage two growth. Okay. Well, then we can see in that case, we're at 20%. So we're going to try to figure out in what situation can we kind of say that it is fair valued. Okay. So let's say maybe we got the bear case a little better than what we're seeing. Okay, we're getting a little better, but granted, not much. You're really going to have to push up some of these estimates. So let's say this is 12, this is 14. You're really going to have to push up these estimates in order to get a fair value. I mean, we're still overvalued. So given these numbers, we're still overvalued. And this kind of gets to my point that I like to find a company that at my base assumptions, it's something like 20% undervalued. And then you can make the more bull case, or you can even make bear case to go against you and you're still undervalued by discounted cash flow analysis. But when it comes to Apple, it's very hard to justify, in my opinion. I mean, they've been known to innovate, sure, and that's driven revenue. If you look at the revenue growth and in the past, especially in the 2010s, they were kicking it. They were doing great and the revenue is increasing substantially. Even in 2021, 4 or 5 years ago, that was an incredible year, 33% revenue growth. They really stood out. And they could definitely do that again. No lie. I mean, last time you saw a free revenue growth, that amount was 2015. So that's 6 years apart. In 2027, realistically, we could see another great revenue growth. But the sentiment behind Apple is that they've been lagging in the tech industry, which is fast moving. To recap the video, I, in my opinion, would say that Apple, in my opinion, is overvalued at this point. I don't see the bull case being that convincing. So I would say for me, I would stay away personally from buying it, although I think it's a great company, especially financially speaking, their metrics are killer, but that doesn't mean the valuation is sweet at the end of the day. So especially compared to competitors and some stocks are tanking, I think there's more fair value plays if you're going for that route. But if you want a consistent company that's going to consistently grow, maybe at a modest rate and maybe provide you a little sanity in terms of volatility, yeah, Apple could definitely be there. But in terms of a buy, I would say it's not. So if you have any questions, feel free to let me know. This is software that I've been working on, calling it Aurora Financial Pro. So if you want something like early access to it, I'd love to send a copy out while I'm just finishing it up. It's pretty good. At this point, it has everything I use for analyzing a stock. If you have any questions, feel free to let me know. Make sure to like, subscribe to the video, share with your friends and family, and make sure to comment below and let me know what stock you guys want to see on the next video. So take care.